What's going on, guys, and welcome back to another video. So in today's video we'll be going through my trading 212 portfolio and discussing my plans over the coming week due to a few different factors such as economic factors, and also we will be looking at dollar cost averaging some of my pies as well, which will definitely play a big role in my plans for the coming week. Firstly, just a recap on last week's trading. My overall portfolio was up about 4.5% at the start of the week, and then the markets kind of had a bit of a nosedive pre the middle of the week, and then it went down to about under 2% in the red. And since Thursday and Friday, when I started to improve my dollar cost averaging by investing a further €300, we are currently back in the green, just about, with 0.62% of a profit overall, and my current overall portfolio value is €4,064.40. There are two key drivers that will push the markets in the coming weeks and months, and the first of these being the US presidential elections, which kicks off on Tuesday, November the 3rd. Now, either or, if Biden or Trump wins, the markets are going to swing up and down repetitively over the coming weeks and months. So as a long-term investor, it's very important to be cash heavy in times like this. So when the markets do fall, let's say 4, 5, 6% in certain sectors, is that then when you take advantage of that and start buying at the dip, so over the long term they'll go back to normal and you'll be getting a better dollar cost average in the long term. And the second factor that's going to make the markets even more volatile is the virus. We can see here that the US cases break global daily record, and experts warn that it will only get worse. So obviously, as you can imagine, such headings from CNN as this will really start driving the market in a downward directory as well. And again, you should be able to take full advantage of this by buying on the dip. But again, we'll be making a proper full video on the US elections and the virus in full and how this will be affecting the market over the coming weeks. I'll try to get that video together maybe the middle of next week. So in terms of my investing plans this week, firstly, I'll probably put a further €200 into the market this week. I'll deposit that just after this video. Then we will be waiting for some of my sector pies to go in the red, and that will help improve my dollar cost averaging in the long term. But I'm going to start setting thresholds, so I'm not going to be investing in any of my pies until they start to dip about 4 or even 5% in the red. So we're going to have a quick look through my 12 pies now to see if any are nearly at that threshold. My first pie is the communication services sector pie. We're currently up 2% here, and I'm quite happy with how they're going. Well, bar AT&T, which is currently down 3.5%. But again, I won't be investing into this company until it dips below the 5. Walt Disney is also down 1.27%, and Facebook is currently up 5.71%. So overall, it's up 2% in this pie, so I won't be touching this for the coming week. Next up, we are in the green, the consumer discretionary sector as well. We have Tesla and McDonald's. Tesla is currently up 2.43%, and McDonald's is down just 1.15%. So again, we won't be touching this pie. Consumer staples is up next, and we are up just over 0.5% in the green. Coca-Cola is pretty much a break even, just down 0.1%. PepsiCo is up 1.38%, and P&G is currently up 0.53%. One of my more volatile pies is the energy sector pie. We are currently down 1.87%. Now, it's not uncommon for this pie to fluctuate like 5% in the green, and the next day or two it's down 5% in the red. So I'm going to wait until that drops to 5% again and buy more into this sector to help improve my dollar cost average. Currently, we are down 1.87%, and ExxonMobil is down 2%, with Chevron down 1.73%. Next up is my ETF pie. I mentioned in a video last week that we added in a new ETF in the form of Vanguard FTSE 100 to help further diversify across the globe, with the Vanguard SP 500 being the US and the FTSE 100 being in the UK. I am setting a weighting of 90% for Vanguard SP 500 and 10% for the FTSE 100. Now you notice here that we haven't invested into this ETF yet because there is news at the moment that the UK is going into another lockdown. So I'm going to wait until that news is confirmed, which will surely drop the price of this ETF even more, and I'll start to buy in on the dip then. One of the pies that I've been investing in a bit over the last few weeks is my financial sector pie, due to being in the red quite a lot in the past few weeks. So I'm trying to help improve my dollar cost averaging as the weeks go by. It is currently down to 4%. So again, once it reaches the threshold of 5% in the red, I'll start to invest further into this sector. Currently, Visa and MasterCard are the ones that are in the red the most, with Visa being down 6.77% and MasterCard being down 10.5%. So I might even start to pump money into both of these companies. They did miss their revenues and their earnings for Q3, but again, long-term investing, there's definitely a good opportunity here, I believe, as especially for MasterCard, which is down over 10.5%. So the other three companies in this pie, JP Morgan Chase, which is up 3.39%, Bank of America, which is just about break even at 2.28% in the green, and Goldman Sachs is down 2.44%. So again, we'll see how these two companies, Visa and MasterCard, go this week, but if they kind of stay around these levels or even get worse, then I'll definitely be buying more. Another sector that has been in the red a lot in the last few weeks is the healthcare sector, and we are currently down 1.82%, which isn't bad considering we were down about 5% last week, but I helped improve my dollar cost averaging by further investing into this pie. Currently Johnson & Johnson is down 3.57%, AbbVie is up 1.64%, and Pfizer is currently down 1.62%. So we'll monitor to this pie over the coming weeks as well, and again, if it drops a bit more, we might think of investing. The next sector is the industrial sector pie. We're currently up 2.69%, with 3M just about break even, up 0.03%, and Caterpillar has been doing quite well, up 8.9%. So again, we'll be leaving this pie this week unless it drastically goes into the red. Materials is next. This is another sector which I just have the one company so far, Barrick Gold, has fluctuated quite a lot in the last few weeks. It has been down about 5 or 6% at some stages. But again, we invested another, I think it was about €70 at the time. So that really helped improve the dollar cost averaging and brought it back to kind of the break-even point at the moment. So we'll be monitoring that pie, definitely. Real estate, realty income has been jumping up and down a lot as well in the past few weeks. But as it's down just 1.22% so far, we'll be leaving this pie as well. We are currently down just €1.58, so that's absolutely nothing. So we'll definitely be keeping an eye, but I doubt I'll be investing in this pie this week. My biggest position is the tech sector. We are currently up 4.05%, with my four holdings being Microsoft up 0.2%, Amazon up 1.24%, Apple is up 0.94%, and Alphabet Class A is currently up 13.83%. And my 12th and final pie is the utility sector. We are currently down just 1.1% in the form of waste management. So overall, that brings together all 12 of my pies. Utilities is down 1.1%, so we leave that. Technology is up 4.05%. Real estate 1.22%. Materials is down 1.07%. Industrials is up 2.69%. Healthcare down 1.82%. One of the sectors we will be looking into this week is the financial sector, which is currently down 3.24% overall, and in particular Visa and MasterCard. ETF is up 1.31%, and again, we'll be making sure that if the FTSE 100 has to drop due to the lockdown, then we'll definitely be buying in on the dip. Energy is down 1.87%, so we'll leave that. Consumer staples is in the green. Consumer discretionary is also in the green, and communication services is also in the green. So in summary, this week we'll just be keeping an eye on all my 12 pies, and if they drop between 4 to 5%, then we'll definitely be buying on the dip. Obviously, they'll be quite volatile again because of the US elections that are coming up, and also because of the virus. We can see here now that I just deposited that €200, so I have that ready to pounce if any of these do meet the criteria in the coming week. So that will mean my overall account value is now at €4,264, which means we are 4.2% towards my overall goal of getting a portfolio to €100,000 invested. So if you found this video anyway helpful or anyway entertaining, it would be great if you consider smashing that like button. And as always, if you're new around here, please consider subscribing to this channel, as it would really help the channel out long term. If you have any questions or queries, or if you have any kind of pointers to note in the coming week in terms of companies or sectors I should invest in, it'd be great if you could comment below with that. So thanks very much, guys. Have a good start to the week, and I will see you in tomorrow's video.